Welcome back, everyone. We're diving deep today into something I know you're all interested in: intermediate investment strategies.
That's right. And not just for stocks.
Yeah, for stocks and crypto.
Mm-hmm.
Looks like someone is ready to graduate from Investing 101.
That's the spirit.
You even sent over some pretty cool sources for this deep dive.
Yeah, looks like we'll be pulling from a few different podcasts.
We've got snippets from Financial Literacy, Road to Wealth, Crypto Crazy, and Navigating the New Wealth Frontier.
Those sound like a good mix.
Yeah. So get ready, because we're going to equip you with the tools and knowledge.
Practical tools and knowledge.
Right, practical to, make those smarter investment decisions.
That's the goal.
I mean, just wait till you hear about this programmer who bought pizza with Bitcoin. Bitcoin that's now worth millions.
Wow.
Yeah, it's a crazy story.
I can't wait to hear that.
We'll also be looking at how to use technical analysis.
Oh, so you can, read the market like a detective.
Exactly.
Looking for clues.
Yeah, for those subtle signals most people miss.
Love that.
Okay, so let's jump right in. Our first source, Financial Literacy. Road to Wealth, they really emphasize.
Oh, yeah, they talk about the trading toolbox.
Yeah. The toolbox.
Mm-hmm.
I love that analogy.
It makes so much sense.
Just like a handyman needs the right tools, investors need specific tools too.
Exactly. We're not talking about your typical hammer and screwdriver here.
Definitely not.
More like technical analysis.
Okay.
Fundamental analysis, and of course, risk management. Those are essential for making smart investment choices.
Absolutely.
Yeah.
Let's break down each tool, starting with technical analysis.
Okay.
That's all about charts, right?
Right, like you're learning the language of the charts.
Yeah, like you're looking for patterns and trends.
Yeah, and those indicators
Yeah.
to kind of anticipate where the price might go next.
Exactly. Like a detective using clues
Absolutely.
to solve a mystery.
I love that analogy.
Now, fundamental analysis. I feel like a lot of people throw that term around,
Yeah.
but don't really know what it means.
They might think it's just like looking at a company's balance sheet.
Right, exactly.
But it's so much more than that. It's about understanding the intrinsic value of an asset.
Okay.
So what's the story behind it? Are they actually solving a real world problem? If it's a crypto project, what's the tech behind it?
The team, too.
The team. Yeah. What's their track record?
Absolutely. And then, of course, there's risk management.
Uh-huh.
This is where I think a lot of, especially newer investors, they kind of trip up.
Yeah. Risk management is so crucial.
Because it's really about protecting your capital.
Right. It's like wearing safety gear in a workshop.
I love that.
You've got to protect yourself. Things like, figuring out how much to invest in each position.
Right.
Setting those stop-loss orders so you don't lose too much.
Yeah.
And diversifying.
Diversifying, not putting all your eggs in one basket.
Right. That's super important.
The podcast even shares this story of Alex, who used all three of those tools, combined them all together, and actually grew their portfolio.
That's great. Shows you what a well-rounded approach can achieve.
Yeah. And then they recommend two really interesting books.
They do. They mention A Random Walk Down Wall Street.
Yes, a classic.
Yeah, and then for crypto, The Bitcoin Standard.
I've heard good things about both of those.
Yeah, so A Random Walk Down Wall Street, it basically challenges this idea that you can perfectly predict the market.
Oh, interesting.
It kind of argues that prices are random.
Especially in the short term.
Yeah, short term, yeah.
Okay. Yeah.
So it really emphasizes the importance of having that long-term perspective.
That makes sense.
And then the Bitcoin Standard,
Yeah.
it goes deep into the history of money, the economic principles that underpin Bitcoin, and its potential as this global currency.
Really gets into the whole picture of what Bitcoin is all about.
Right. Beyond the hype.
Okay, so we've got our foundation. Now let's get into some specific strategies. Financial literacy suggests a classic approach, for stocks at least.
Yeah.
It's the buy and hold strategy, right? For long-term growth.
Yeah, you're basically buying assets that you believe in, high-quality companies, and you're holding on to them for years.
Letting them appreciate in value over time.
Right. The podcast actually mentioned a study that found that a lot of investors underperform the market because they try to time it.
They're constantly buying and selling, trying to catch those peaks and valleys.
Exactly. Buy and hold can help you avoid that emotional roller coaster.
Right. And then, for those who want a bit more action.
Who like to be a little more active.
Exactly. The podcast touches on swing trading.
Ah, yes. Swing trading. That's where you're trying to capture those shorter-term price swings within a larger trend.
Oh, okay.
So it requires more, attention and time, but it can be rewarding.
if you can handle it.
If you're comfortable with the risk. Things like, chart patterns and volume analysis become super important here.
Okay, so now let's shift gears. We're going into the fast-paced world of cryptocurrency.
Crypto crazy. Here we come.
They're very upfront about the volatility of crypto.
Oh yeah, they're not sugarcoating it.
Like Bitcoin dropping 50% in 2022, they don't shy away from that.
That's a pretty big drop.
It is.
Yeah.
But, volatility also creates opportunity.
That's true.
The key is managing that volatility.
And not letting fear take over.
Exactly.
Yeah.
Crypto crazy highlights a couple of technical indicators that can help.
Oh yeah, they mention RSI and Bollinger Bands.
Right. Which, of course, you wouldn't just jump into without understanding how they work.
Right.
But they can be powerful tools.
When used correctly.
Yeah, for spotting those entry and exit points.
Yeah.
And then they talk about staying informed.
About the industry news.
Yeah.
The regulatory changes, because that can have a huge impact on prices.
Especially in crypto, right. More so than stocks.
Right. Much more.
Okay, so let's talk about blockchain. One of the fundamental concepts in crypto.
It's the backbone of it all.
And Crypto Crazy uses this awesome analogy to explain it.
Oh yeah, they compare it to like a Minecraft world.
I love that.
Where every mined diamond is recorded publicly.
So everyone can see it.
Transparent and secure.
Yeah. Virtually impossible to cheat.
Exactly. That's the power of blockchain.
Then they introduced Bitcoin.
The original.
The OG, right. Mined by solving complex math problems.
Yeah, and there will only ever be 21 million Bitcoin in existence.
That's wild. Which is why people compare it to, digital gold.
Because it's scarce.
Yeah. And you want to hear something crazy? In 2010, a programmer bought 2 pizzas with 10,000 Bitcoin.
No way. What are those worth now?
Hundreds of millions of dollars.
Oh my gosh. That's insane.
It really shows the potential of crypto, right?
Yeah.
But also how early it was back then.
Yeah, and how volatile things were.
Yeah. Imagine just like casually ordering a pizza.
And accidentally becoming a millionaire.
Or like a multimillionaire.
A multimillionaire. That's a good story.
It is.
Yeah.
But remember, crypto isn't just about Bitcoin.
Oh.
Crypto Crazy explores altcoins too.
Like Ethereum.
Ethereum.
Right.
Which is much more than just a digital currency, right?
Yeah, it's like a platform for developers
Yeah.
to build all these decentralized applications using what they call smart contracts.
So they're like contracts but written in code.
Right. And they can self-execute.
Wow. That opens up all sorts of possibility.
It really does.
Yeah.
For finance, gaming, you name it.
And then there's the whole world of meme coins, like Dogecoin.
Oh, yeah, Dogecoin.
I mean, we were talking about crowd psychology earlier.
Yeah.
Well, Crypto Crazy tells the story of Dogecoin's rise.
Oh, yeah.
They went from, like, a joke
Totally joke.
to a billion-dollar asset.
Yeah, in no time at all, just because of social media and Elon Musk tweeting about it.
It's really wild how much influence these communities and celebrities can have.
It's pretty incredible.
But also, like, makes you wonder about the long-term sustainability of it all.
Yeah, because hype cycles can be powerful but also fleeting.
That's true. Now, we got to talk about the risks.
The other side of the coin.
Crypto Crazy is honest about that. They remind us that both Bitcoin and Ethereum have crashed hard in the past.
Like back in 2018.
Ethereum crashed over 80%.
Yeah.
A lot of people lost a lot of money.
It's a stark reminder that
Definitely.
risk management is crucial in this space.
And they even talk about rug pulls.
Yeah.
Which sound kind of scary.
They can be. Basically, it's when developers, abandon a project and run off with everyone's money.
That's awful.
Yeah, unfortunately, those scams are more common than you might think.
That's why research is so important.
Absolutely. Don't just buy something because it's trending on Twitter.
Right. Dig deeper, look into the team, the white paper, and the community.
It's like being a detective.
Exactly.
You're gathering evidence before you make a decision.
They also debunk this myth that crypto is only used for illegal stuff,
Yeah, that's just not true.
which you hear a lot in the mainstream media.
Yeah, they like to paint it that way, but
Crypto Crazy highlights some of the legitimate uses.
like remittances, sending money across borders quickly and cheaply,
Right.
NFTs, which are unique digital assets.
And then there's Web3, this whole idea of a decentralized internet built on blockchain.
That's definitely getting a lot of buzz these days.
So it's exciting, but I bet you're wondering how to actually get started.
The practical steps.
Right. Crypto Crazy has some tips, starting with security.
Super important.
They recommend hardware wallets like Ledger or Trezor, for storing larger amounts of crypto offline.
Like your own personal Fort Knox.
Much safer than keeping it on an exchange.
Absolutely. Exchanges are targets for hackers, you know?
And for smaller transactions, they suggest hot wallets.
Like MetaMask,
Right.
which are more convenient for trading.
They also really emphasize research,
Oh, yeah.
like reading the project's white paper
The blueprint of the project.
and looking into the team's credibility, checking their track record.
Yeah, and don't forget to check what the community's saying.
Online forums can be a great resource for that.
Absolutely. Reddit, Twitter, you name it.
And then for managing risk, they mention dollar cost averaging,
That's a good one.
investing small amounts regularly.
To kind of average out your entry point.
Right. And then there's staking,
Earning passive income by holding certain cryptocurrencies.
like earning interest.
Yeah. But always do your research before jumping into anything.
Absolutely. Now let's get into some more detail about technical analysis.
Oh yeah, navigating the new wealth frontier is all about that.
They describe it as charting like a detective, using charts to uncover clues about price movements.
I love that analogy.
It's like learning to read the market's body language, those subtle hints.
That most people miss.
They start with candlestick charts.
The most common type of chart.
Each candlestick tells a story about price changes over a specific period,
Like a green candlestick means the price went up.
and a red one means it went down.
Right. So they're like the individual words in this ongoing market narrative.
And we can string those words together to form sentences, paragraphs, and even whole stories.
Right. And those are the patterns and trends we're looking for.
Navigating the new wealth frontier even dives into specific patterns and indicators that can be really helpful.
They get into trend spotting too, right? Like
Right.
determining whether the market is going up, down, or sideways.
Yeah, an uptrend is like a staircase climbing upwards,
Higher highs and higher lows.
and a downtrend is the opposite,
Descending staircase.
with lower highs and lower lows.
Yeah.
And then there are sideways trends, where the price seems stuck.
Bouncing between a ceiling and a floor.
It's like taking the market's pulse.
Figuring out its mood.
Yeah, bullish, bearish, or neutral.
And that helps you decide whether to buy, sell, or hold.
Then there's support and resistance, this battle between buyers and sellers.
Where the price often bounces between these invisible barriers.
Support is like a floor,
Where buyers step in.
and resistance is like a ceiling.
Where sellers take over.
They use this great analogy of a bouncy ball.
I remember that one.
It's so easy to visualize.
Bouncing between the floor and the ceiling.
When it hits the floor support, it bounces back up.
And when it hits the ceiling, resistance, it bounces back down.
But what happens when the ball breaks through the floor of the ceiling?
That's where things get really interesting.
Those breakouts and breakdowns can signal big price moves.
Yeah, a breakout above resistance could mean the uptrend is continuing.
And a breakdown below support could mean the downtrend is continuing.
But it's like detective work. We need to look for other clues to confirm those signals.
Navigating the new wealth frontier also talks about moving averages.
Those are great for smoothing out the price fluctuations.
Yeah, they're like trend lines that help us see the bigger picture.
You remember the roller coaster analogy?
The moving average is the smooth path of the ride.
And the actual price is the bumpy track.
Exactly. It helps us stay focused on the overall direction. And they even give a real-world example,
Using Bitcoin's chart.
showing how to identify an uptrend and support levels. It's like they're giving us a step-by-step guide.
Yeah, it's really helpful for visualizing how these concepts work in practice.
Now, I know all this can seem overwhelming,
It's a lot to take in.
but navigating the new wealth frontier emphasizes practice.
The more you practice, the better you'll get at recognizing those patterns.
Like learning any language, you got to use it to become fluent.
Yeah, use those free charting tools, experiment, and have fun with it.
And before we wrap up this part of our deep dive, I want to emphasize something that all three podcasts stress.
Oh yeah, it's so important.
Risk management.
Absolutely. You got to protect your capital.
It's not just about making money.
It's about not losing it all.
Even the best investors experience losses,
It's inevitable.
but they manage those losses so they don't wipe them out.
It's like that saying, bulls make money, bears make money, pigs get slaughtered.
Don't be a pig.
Mhm.
Manage your risk, stay informed, and never stop learning.
Wise words.
We've covered a ton of ground in this first part of our deep dive, but there's still so much more to explore.
I can't wait.
Stay tuned for part 2, where we'll go even deeper and help you build that personalized investment strategy.
It's going to be good. All right, so we've talked about those essential tools in your investor toolbox.
Yeah, we've covered a lot.
explored some fundamental strategies, and we even dove into that exciting world of blockchain tech.
Blockchain is so cool.
It really is. But I think now it's time to delve even deeper.
Oh, yeah. Into technical analysis.
Exactly. Remember that Navigating the New Wealth Frontier podcast? They talked about charting like a detective, right?
I love that. Like, we're searching for clues on those charts.
Yeah, deciphering patterns and, trying to anticipate the market's next move.
It's like a secret language.
It really is. And once you start to understand that language, it opens up a whole new world.
Right. We talked about those candlestick charts, the green and red ones, those visual representations of price movements.
Right. And remember, those candlesticks are just the beginning.
Yeah, they're like the building blocks.
Yeah, like individual letters.
We need to put them together to form words, sentences, the whole story.
Exactly. Navigating the New Wealth Frontier goes beyond just the basics and gets into specific patterns and indicators that can be really helpful.
Like trend spotting, right?
Yeah, trend spotting. That's all about figuring out the direction the market is moving.
Up, down, or sideways.
Exactly. So like an uptrend that's characterized by higher highs and higher lows, like picture a staircase climbing upwards.
Okay, I can see that.
And then a downtrend, it's the opposite. It's like a staircase going down, lower highs and lower lows.
Makes sense.
And then you've got those sideways trends where prices seem stuck in a range.
Like they're bouncing between a ceiling and a floor.
Exactly. And recognizing these trends is crucial, for understanding that overall market momentum. It's like taking the market's pulse.
Oh, I like that. So you know whether to buy, sell, or hold.
Right. It gives you that context. And they also get into support and resistance.
Oh, yeah, that's fascinating.
It's this battle between buyers and sellers, right? Prices often bounce between these invisible barriers.
Support acts like a floor, a level where buyers step in.
Yeah, to prevent the price from falling further. And then resistance is like a ceiling.
Where the sellers take over.
Exactly, to stop the price from going higher.
And they use that awesome bouncy ball analogy, remember?
Oh, yeah. That one was good.
So easy to picture.
The ball bouncing between the floor and ceiling.
So when it hits the floor, that's support. It bounces back up.
And when it hits the ceiling, resistance, it bounces back down.
But what happens when it breaks through the floor or the ceiling?
That's when things get really interesting.
Those breakouts and breakdowns, they can be those big signals.
Yeah, they often signal potential price moves. Like a breakout above resistance could suggest that the uptrend is going to continue.
And a breakdown below support could mean that downtrend is going to keep going.
Right. But it's important to remember, not all breakouts and breakdowns are created equal.
Right. We can't jump to conclusions too quickly.
Yeah. It's like detective work, right? You got to gather all the evidence.
Yeah.
They also highlight moving averages, which we touched on earlier.
Oh, yeah. Those are so helpful for seeing the bigger picture.
Yeah, they smooth out those short-term price fluctuations so you can see the underlying trend.
Remember the roller coaster.
The moving average is that smooth path of the roller coaster, while the actual price is like all the bumpy ups and downs.
It keeps us focused on the overall direction of the ride. And they even gave a real-world example, right?
With Bitcoin's chart.
Yeah. Showing us how to spot an uptrend and those support levels.
Yeah. It really helps to see how these concepts play out in a real market.
Now, I know all this can seem a bit intimidating,
Especially if you're just starting out.
but financial literacy emphasizes that continuous learning is key.
Yeah. Investing is a journey, not a destination. You're always learning, always growing.
And even experienced investors, they make mistakes.
It happens to everyone,
The key is to learn from those mistakes.
right? Analyze what went wrong, adjust your approach, and move forward.
And remember, you don't have to figure it all out on your own.
Yeah, those books they recommended, A Random Walk Down Wall Street and The Bitcoin Standard,
Those can be such valuable resources.
full of insights from experienced investors.
So learn from the best.
Exactly. And Crypto Crazy reminds us that the crypto space is constantly changing, so staying informed is super important.
Yeah, it's like the Wild West out there.
Things can change so quickly, but that's also what makes it so exciting.
It's like being on the frontier of a new technological revolution.
But with that excitement comes the need for caution.
Right.
Crypto Crazy really stresses the importance of due diligence and protecting yourself.
Research is key.
Absolutely. Understand the project, the team, and the community before investing.
It's like being a detective, right?
Gathering all the evidence before making a decision. Now, in part 3, we're going to bring it all together and focus on how to apply this knowledge to your own investment goals.
Sounds good. Okay, so we've learned about all the essential tools. We've explored those different strategies.
And we even uncovered some fascinating stories from the world of investing, right?
Yeah, like that programmer who bought pizza with Bitcoin.
Oh, yeah. A pizza that's now worth millions.
Crazy. So we've gone from the basics of buy and hold to deciphering charts like detectives.
We've even ventured into that exciting world of blockchain and crypto, uncovering all sorts of opportunities.
But now it's time to, bring it all together.
Yeah, to personalize it.
Exactly. To help you build a strategy that aligns with your goals.
Your own unique goals.
Right. Because investing isn't one size fits all.
Not at all. It's about knowing yourself as much as you know the markets.
Okay, so let's start with risk tolerance.
Yeah, how comfortable are you with the idea of your investments, going up and down?
Even losing money in the short term. That's a question every investor have to ask themselves.
Honestly, yeah.
If you're someone who gets anxious when the market dips,
Yeah, you might prefer a more conservative approach.
focusing on capital preservation and steady growth.
Right, that could mean looking at those well-established companies.
The blue chip stocks,
Exactly. With a history of, paying dividends.
or maybe even bonds.
Yeah, bonds offer more stability, but they typically have lower returns.
But if you're okay with a little more excitement,
If you see those market dips as opportunities,
yeah, then you might have a higher risk appetite,
and that opens up more possibilities.
like growth stocks with, huge potential.
Emerging markets, too.
And of course, crypto, which we talked a lot about.
High risk, high reward.
The key is finding that sweet spot, right?
Yeah, that balance between your personality and your financial goals.
And speaking of goals, that's the next piece of the puzzle.
Right. What are you hoping to achieve? Saving for retirement? A down payment on a house?
Maybe building a legacy for your family. Each goal needs a different plan.
Like, if you're investing for retirement, you have time on your side.
You can ride out those market swings and focus on the long term.
But if you're saving for something like a down payment in a couple of years,
Yeah, you might need something more stable.
less volatile.
So once you've figured out your risk tolerance and your goals,
Then we've got your time horizon.
oh yeah, how long are you willing to let those investments grow?
Are you in it for the long haul, or do you need that money soon?
That will affect your asset allocation.
Asset allocation just means deciding how to divide your investments.
Okay, like between stocks, bonds, real estate, crypto.
Exactly. So if you have a longer time horizon, you might put more into stocks. Historically, they've had higher returns over time.
But if you need the money sooner, you might want more bonds or cash.
Right, for stability and liquidity.
Okay, so now it's time to use that toolbox we talked about.
Put those tools to work.
Technical analysis can help you find those entry and exit points.
Yeah, when to buy and when to sell.
Fundamental analysis helps you understand the true value of an asset.
Whether it's a stock, a bond, or a crypto.
And risk management, that's your safety net.
To protect your hard-earned money.
Those books, A Random Walk Down Wall Street and The Bitcoin Standard, those can give you so much insight.
Learn from the experts.
Crypto Crazy also reminds us that crypto is always changing.
Staying informed is crucial. Reading industry news, understanding regulations.
It's a fast-paced world.
But that's also what makes it so exciting.
It's like being a part of something brand new.
But remember, approach it with caution.
Do your research.
Protect yourself.
So as you begin this investing journey, just remember, there will be ups and downs.
It's a roller coaster.
But stay informed, manage your risk, and never stop learning.
You got this.
And most importantly, have fun with it. Investing can be intellectually stimulating and financially rewarding.
It's a journey of discovery.
So now that you're armed with this knowledge, what story do you want to tell with your investments?
What legacy are you going to build? Choose a company, a crypto, a trend that excites you.
Put on your detective hat, use those tools, and start exploring. Happy investing, everyone.